More people are missing out on this stock market rally than many people think. The 2023 bull market is in full force. The past week has been one of the best weeks for my portfolio over the past 24 months. And although this time last year I was criticized quite a bit for consistently investing in some of my favorite companies and buying the dip, that narrative has flipped completely to the upside today. There's no doubt, folks, that this is the most shocking rally that most retail investors have seen since the start of the pandemic. For the first time in over 3 years, we are seeing actual FOMO, or fear of missing out, from not only retail, but also institutions, resulting in historic short squeezes for some of our favorite stocks. And although we've had a really good run, folks, historical data is showing us that right now is not the right time to even consider selling any positions. As a matter of fact, right now, people should potentially be doubling down. Why exactly is that the case? What's in store for stocks and small caps for the rest of this year? And what exactly is going on with inflation? Well, those questions are exactly what I'm going to address in this video. But as usual, folks, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. First things first, folks, we got to address the elephant in the room. The single reason markets are so relaxed in 2023 has everything to do with inflation. The narrative that inflation was gonna go up, and the fact we're going to see a potential stagflationary scenario with a mild recession has been thrown out the window. Just like many people like myself predicted, deflationary pressures are already hitting the economy. And from the levels of 9% we saw in June of last year, CPI is now at 3%. And yes, folks, that means that for the first time in over 3 years, the benchmark Fed funds rate is higher than CPI. This means that we are only 1% away from hitting the Fed's target range of 2%. And given the current rate of deceleration we're seeing in headline inflation and goods prices, chances are we're going to hit 2% within the next 60 days. That is no joke for stocks. And as you can see, compared to the bear markets of 2008 and 2001, the 2022 bear market, which is officially over, has completely outperformed those previous ones. And let's be brutally honest about this, folks. Basically, nobody saw this rally coming. As a matter of fact, only 20% of hedge funds were exposed longside to the SPX in December of last year. And most social media sentiment on Twitter and even on my YouTube comment section was grossly towards the negative, with arguments like inflation is still too high, interest rates are at decade highs, and the recession is going to tank the market like it did in 2008. But clearly, none of those arguments stood the test of time. And in my opinion, that is simply a textbook play. Because for those that don't understand the market cycles, it may seem like this is yet another fake out for trapping retail investors, but in reality, looking at net shorts, liquidity positions, as well as positioning of most institutional fund managers, chances are this rally is just getting started. You see, folks, this time last year, I'm sure many people would agree that we were mostly in this anxiety phase in the market. For those that are unfamiliar, 2020 and 2021 was most likely the thrill and euphoria phase of the broader market cycle, which ended up calling the top of most growth stocks. 2022 was mostly a year of denial, panic, and capitulation, and even at the end of last year, quite a lot of anger and depression. I saw plenty of people sell their stocks off at huge losses, do tax write-offs, and say that they are never going to invest in the market again, whether that be in their IRA through index funds or actual hand-picking stocks. People lost all interest, and it was a similar thing for the crypto markets. But now, folks, in 2023, we are entering the stage 2 of this market cycle, which happens to be right around the disbelieve side of things. You heard that right, folks. We're at the very beginning of stage 2, which typically and historically provides the best returns for traders and investors. This doesn't mean that every single stock in your portfolio is all of a sudden going to outperform. It just means that looking at a standard deviation, most stocks on the S&P 500 and the Russell 2000 will now start rallying over the next 2 to 3 years. This is a part of a broader market cycle, which typically results in stage 3 during a time of recession or economic turmoil, and then stage 4, which typically coincides with a bear market. Stage 1 was an accumulation phase, particularly for small cap growth stocks. And it's those stocks right now that are just starting to enter the stage 2 phase. And why exactly do I say that? Well, as you can see, folks, large cap stocks have already had a really good rally for 2023. However, small cap stocks, as tracked by the IWM, have not seen anywhere near the returns we're seeing in some of the bigger companies. And this right here is exactly the phase of stage 1, which is an accumulation phase where people get shaken out and institutions accumulate shares to help bid up the market for the next rally. This trend is also clearly visible by the ARK Innovation ETF, which in my opinion is the best proxy of small cap, unprofitable, and somewhat high growth companies. This index was the very first one to sell off, and if you coincided with the chart that I just showed you, it turns out there is indeed quite a lot of similarity. It's pretty clear that we are outside of the capitulation phase, and we are now building the foundation for what could be the next FOMO-fueled rally. This obviously doesn't mean you go all in every single stock. You have to still do your research and be patient in the positions that you own. But if you have missed out on this rally, or you are still sitting on the sidelines with more cash than you initially expected, then right now is not the time to continue to sit on the sidelines. Although some stocks look extended, the reality is this is just the beginning of a broader trend shift, and you do not want to miss out on the stage 2 cycle. This tends to happen in most new bull market formations where people are in disbelief of the rally and people sit on the sidelines until the next euphoria phase. And the reality is that next euphoria phase is not going to come at least for another 2 to 3 years. So you're better off sticking to your conviction and potentially riding out the trend. But as usual, folks, that is only my take on the situation. Let me know your thoughts down in the comment section below. Do you think this is the start of a new bull market, or do you think more volatility is yet to come? As usual, folks, thank you very much for watching, and I'll catch you guys in the next one. Take care.